If you have been looking for a one-stop video to learn and master the art of price action trading, then this is the video for you. In this video, I'm going to be going straight to the point, no bullshit, talking about the most important things you need to learn in order to be able to apply price action trading the correct way. And I'm going to be going over to the charts to show you a practical example of applying every single thing I'm going to be talking about in today's teaching. So grab your pen, grab your book, and take note of every single thing I'm going to be talking about in today's teaching. I'm going to start by talking about what price action trading is. It's important to note that price action trading entails the art of reading historical and recent chart data and using that information to predict the future movement of prices. With price action trading, we go from the monthly time frame, which is the highest time frame available to us on the market, and we go to as little as the 15 minutes time frame for recent chart data to be able to coordinate historical information from the monthly time frame and recent information from the 15 minutes, 30 minutes, 1 hour time frame, and we coordinate all of this informations together to be able to properly predict the future movement of prices. Okay, and this is one of the reasons why price action trading is the most beautiful system of trading, because we go to the monthly time frame, which is like the top floor of the penthouse, and we're able to see the whole city. Okay, we're able to see the whole markets. We're able to understand where price has been trading since about 1975, and we can also be able to coordinate that information with what is going on the 15 minutes time frame, on the 30 minutes time frame, by what? By understanding the real-time structure where prices is currently going to and coordinating all this information together for high probability trade setups. Okay, so the next thing to talk about is what are the elements of this price action trading? When we're talking about elements, that is what I call them the 5 points. Okay, that is, there are 5 areas of price action trading that with the understanding and mastery of these 5 areas, you are going to trade price action trading easily. Okay, what is the first point? That is what? Chart structures. It's important to note that chart structures is the backbone of price action trading. That is, with a proper mastery of price action, of chart structure, you are going to have a free flow when it comes to price action trading. Okay, what are chart structures? It's important to note that chart structures are the coordinated movement of candlesticks on the chart. Whenever you go onto your charts, all of those coordinated movements, right, where prices goes bullish, goes bearish, all of those movements are known as chart structures. When a novice comes onto the charts and he sees all of those movements, the novice is like, oh, market is making random movements, okay? But we as professionals, we know that all of those movements are not random, and those movements are in coordinated and likewise movements known as what? Chart structures. And it's also important to note that chart structures are in 2 parts, which are what? The bullish chart structures and the bearish chart structures. Okay, so what is the next one? The next one is trend lines. What are trend lines? Trend lines are diagonal support and resistance tools. Trend lines are used to checkmate the strength of a trend. Okay, if a bullish trend is still strong, the market will obey an ascending trend line. If a bearish trend line is still strong, the market will obey a descending trend line. If market violates a trend line, it means that that trend is no longer strong, and there's a high probability that the other trend, that is what? If market is making a bullish trend, for example, and it violates an ascending trend line, it would mean that the bulls most likely are no longer in charge and the bears have taken over prices. Likewise, also, if market disobeys a descending trend line, it would mean that what? That the bears are no longer in charge and the bulls have probably taken over prices. That's why we say that what? Trend lines are used to checkmate the strengths of a trend. What is the third one? The third one are what? Horizontal support and resistance zones. Okay, what are these used for? These are used to checkmate horizontal levels of support or resistance on the chart. Okay, this is so that we are able to buy on support levels and sell on resistance levels. Okay, or even if you are selling at resistance levels, you can be able to take profit at support levels. And even if you are buying at support levels, you can be able to take profit at resistance levels. Okay, so the mastery of horizontal support and resistance levels are excellent in our what exit and entry. Okay, so what is the fourth element of price action trading? This is the Fibonacci. What is the Fibonacci? The Fibonacci is a retracement and an extension tool. A Fibonacci allows us to know where a retracement might be ending and where an extension might be ending. Okay, so when it comes to the Fibonacci, it's important to note that 61.8 Fib level, also known as the golden zone, ends a retracement. So whenever you are in a trade and the trade is a retracement, 61.8 Fibonacci level ends that opportunity. Okay, while what if you are in a trade and the opportunity is in the direction of trend, 100.0 or 1 Fib level ends that opportunity in the direction of trend. Okay, so those are very important when it comes to the Fibonacci. Okay, 100.0 Fibonacci level ends an opportunity in direction of trend, and 61.8 Fibonacci level ends a retracement opportunity. Okay, what is the last element of price action trading? It's also known as what? The potential reversal area. Okay, so these are levels in the chart that prices get to and prices may not be able to go beyond. Okay, for me to pick an entry, I must see a potential reversal area. The potential reversal area could be a Fibonacci 61.8 level. It could be a Fibonacci 100.0 level. It could be an horizontal support and resistance level. It could be a trend line level. But the most important thing is what? As soon as I recognize a potential reversal area, and I have to check the higher time frames to make sure that this potential reversal area is very concrete coming from the higher time frames. Okay, so as soon as I'm able to validate that the potential reversal area is truly a strong one, then what can I do? I can now be able to what? To sell at potential reversal areas or buy at potential reversal areas as soon as it is confirmed by a break of structure. On the left side of my screen, we have a bullish structure, and on the right side of my screen, we have a bearish structure. Before we go into that, what are these break-off structures and how significant are break-off structures for us in price action trading? It's important to note that break-off structures are the most important thing that validates an entry for us. Okay, if we see a potential reversal area, we see a trend line, and we see all of those things, and we don't see a break-off structure, then there is no trade entry opportunity for us. Okay, so a break-off structure is very significant for us as what? As it is the number one entity that opens up a trade opportunity or a trade entry for us. Okay, so now, what are these break-off structures? For example, on the left side, we can see prices make clear bullish structures. If prices, instead of continuous higher highs and higher lows like it has been making, instead of making another higher low and taking off, instead of doing that, prices comes and breaks below the last higher low, then this is what it means by what? A break of a bullish structure. And this is the only thing that confirms what? A break of a bullish structure. Where what? The last higher low right here, this is an higher low right here, gets invalidated and prices now makes what? A lower low. That is a low that is lower than the previous low. Okay, so this is where what? Where a bullish structure gets violated. Okay, how about a bearish structure? The only thing that validates a break of structure is what? Instead of prices in this case making another lower high right here and continuing its beautiful movements of lower highs and lower lows, which is what entails in a bearish structure, then prices comes and what? And breaks the last lower high right here. Okay, so this is a lower high here. Let's go ahead and write that out. This is a lower high. And right now, prices has now made an higher high. That is an high that is higher than the previous high. Now, this is what validates the break of what? Of structure. Okay, going back to the left side, when this break of structure happens, what can we do? We can be able to what? To place a trade as soon as what? The structure has been broken. In this case, price was initially making clear coordinations of higher highs and higher lows. Now the last higher low is broken and price has made a lower low, indicating to us that what? That we can place a sell entry as the bulls are no longer in charge of the markets and the bears are now the ones in charge. And what? Go on to the right side, we can be able to place a buy entry right here because what? The break of the structure has indicated to us that the bears are no longer in charge of the market. Initially, the prices was on clear structures of lower highs and lower lows, but they are no longer in charge of the market. And right now, we can be able to what? Place a very beautiful buy entry at what? At the break of this structure. What are our entry variations? For the benefit of this teaching, I'm only going to be showing you guys 2 entry variations. The other entry variations are reserved for my students in the mentorship program. If you want to join the students in the mentorship program, there's a link in the description below where you can join them, and I will take you by the hand through the understanding and mastery of every single aspect of price action trading. Okay, so on the left side, we can see that what? This is an entry variation 1. What does an entry variation 1 entails? This means that what? As soon as there's a break of structure, what do? We place in our entry immediately. Okay? This means we don't wait for a discount, we don't wait for anything else. As soon as what? A structure has been broken within the confines of that fractal, we place our entry. Okay? So that's on the left side. Then on the right side, as soon as there's a break of structure, instead of placing our entry directly, we are knowledgeable to know that what? After a break of structure, about 90 to 95% of times, prices comes back to give a discount. Okay, so after a break of structure, it comes back to give a discount, and usually the discount is at 61.8. So what do? We place a pinpoint buy in this case, or a pinpoint entry at the 61.8 with all our stop losses. Obviously, stop losses has to be at the low on entry variation 1, has to be at the low right here on entry variation 2. Okay, but with the entry variation 2, our stop loss, our entry is at the 61.8 pinpoint, while what? With entry variation 1, our entry is pinpoint the break of structure. Okay, so that's the difference between the entry variation 1 and the entry variation 2. Now we are going to go over to the real life chart to apply every single thing I've just talked about into a real life chart. We are going to be taking US 30 for our teaching today. Just like I told you earlier, we start from the monthly time frame, which is the top floor of the penthouse, and we take prices regressively from the monthly time frame to the smallest time frame, which is the 15 minutes time frame, for a real-time trade entry opportunity. Okay, so what do when we come onto this monthly time frame? The first thing we have to do is to what? Identify the real-time points where price is at. We can see clearly that all this zone right here is where price is at, so we can just leave this like this. Okay, the next thing is to understand the structures that took prices to this point. Remember, we said under structures, we have the bullish structure and we have the bearish structure. The bullish structure being a clear coordination of higher highs and higher lows, while the bearish structure being a clear coordination of lower highs and lower lows. Okay, so what are these bullish structure? We can see prices make push, exhaustion right here, push, exhaustion right here. These are big fractals. I've taught big fractals in multiple videos in the past, and you can go ahead to those videos and study fractals. Okay, so these are big fractals. Then price now started by making what? Small fractals right here. These are small fractals. Then prices came right here, made a big fractal here, made another big one right here, then started with small fractals again. These are push, exhaustion, push, exhaustion, then made the smallest fractal here, push, exhaustion, and push to the real-time point where prices is currently at. Okay, so some things are sure and are clear. One, prices overall is on clear bullish structures. In fact, price has been on bullish structures forever on US 30. We can see that since like 1971 or so, this particular pair has been on a bullish structure. Okay, so the next thing that we notice is that what prices moved on different fractals. Okay, so let me just give you guys a brief introduction of what fractals is. It's important to note that fractals are likewise movement of structures. Okay, right here we can see this large movement. Okay, then we can see prices make small movements. Okay, so these small movements are different fractals. Okay, the large movements are a unique fractals on their own. The small movements are unique fractals on their own. Okay, and fractals are also the length of the exhaustion. Okay, remember, after every push, there must be a rest phase. After every push, there must be a rest phase. So fractals are the length of this exhaustion. You can bring out your measuring tool to measure fractals. Okay, so fractals aside, on the monthly time frame, price is clearly bullish. Okay, so what are we going to do? This is the highest point right here. We are now going to take what? The last higher low right here. Okay, so this window right here, also known as our range of focus, will now become our most important point right now. Okay, so let's go ahead and write that this is a range of focus. Okay, so this now becomes our most important point right now, the highest point right here and this low point. Okay, so now because on the monthly time frame price is clearly bullish, so this would mean that what? If we go to the small time frames and we are picking a sell trade, that sell is a retracement. And remember what I said, that what? A 61.8 Fibonacci level ends a retracement. Okay, while what? In the direction of trend, the 100.0 Fib level, or also known as the 1 Fib level, ends what? An opportunity in the direction of trend. Within this range of focus, we are fully aware that what? Because overall price is bullish, if we are selling it in the overall direction of trend, while if we are buying, it's what? A retracement. Okay, so now let's take this very beautiful range of focus to the weekly time frame to read the structures. On the weekly time frame, this is our range of focus like we drafted out from the monthly time frame. Okay, so within this range of focus, we saw prices start on big fractal here, push exhaustion, then make the bigger one right here. You can see the length of the exhaustion, push exhaustion, then started small fractals here, push exhaustion, small fractals, then hit this resistance, and there was a break of structure originally at this point. Okay, so how could we see our break of structure clearer? You can switch to the line chart and bring out your horizontal line right here and put it right here, and we can see that what? The last higher low right here was truly broken. Prices made a lower low right here to indicate a break of structure. So now the next question is, what fractal was broken? We are now going to bring out our Fibonacci, and we notice that what? This is a small exhaustion. This is a small exhaustion, while the length of this to this is a longer exhaustion. So this one right here is of a different fractal, and any other thing behind it is different from this broken fractal. Okay, so this small one right here and this small one are the fractals that have been broken. So what am I going to do? I'm going to bring out my Fibonacci from what? From the exhaustion that begins the new fractal. So that is from the low right here to the high right here. And we can see clearly that what? Prices rejected the 61.8. Remember we said that what? The 61.8 level ends what? Ends the retracement opportunity. Remember we said within this range of focus, if you are selling, it's a retracement. So even though there was a break of the bullish structure, prices ended at the 61.8 right here, starting from what? Using the Fibonacci rightly, from the exhaustion that started the new fractal. Okay, so this is the exhaustion after the new fractal. Price came, established another exhaustion here, broke the last higher low, and ended just at an equal level here at the 61.8 to end that bearish opportunity. Okay, and from there we identified 61.8 right here as a potential reversal area. This is the potential reversal area I was telling you guys about, that what? These are levels that prices get to and may not be able to go beyond. So we identify this level as a potential reversal area, that this level is going to send prices up to back to this resistance level in the direction of trend. And prices did exactly that. Okay, let's take that to the daily time frame. So on the daily time frame, this is our range of focus. We saw all the structures that brought prices to the 61.8 PRA. All the structures got broken right here. The last lower high of all the structures were broken, and they sent prices to the resistance in the direction of trend at this point. If you check out my previous video, I showed everyone how you could have gone to the 15 minutes time frame and capitalized on several opportunities to ride this trade for, at maximum, we saw about 1:17 risk reward by just what? understanding where price is going overall. This one now we've seen the direction of trend, and going on to the small time frame, like the 15-minute time frame, to capitalize on trade positions to this resistance, okay, in the direction of trend. Remember, this resistance is the 100.0 because it's in the direction of trend. It is written as 1 right here. Okay, this one is also known as 100.0 Fibonacci level. So this is your take profit in the direction of trend. Okay, so check the previous video for that particular teaching of what the breakdown of all the opportunities of this movement to as much as that resistance. Okay, so now price has finally gotten to that resistance. So now we can identify that level as what? As a resistance potential reversal area. Because of the fact that overall US 30 is very bullish, I'm not going to be looking for any sells. Okay, there could be sell opportunities which will be retracements, obviously, because that means you'll be trading against the overall direction of trend. But for me personally, I'm not going to be trading against the overall flow of the market. I'm just going to be waiting for prices to come to me, okay, make that retracement, come to me, and I'm going to buy again in the direction of trend. Okay, so right now, what are we going to do? We are now going to take this bullish movement that took price from the 61.8 PRA to this resistance PRA right here. We're going to take this movement down again to the 4 hours time frame to look for an opportunity. Okay, market is making some retracement opportunities. My job is to what? To look for PRAs, and as soon as prices hit that PRA, I'm going to look for a buy opportunity. Okay, so now we'll take that move to the 4 hours time frame. What is going on within the 4 hour time frame? Within the 4 hour time frame, we had seen prices make all of these moves right here. Push, exhaustion. This is a unique fractal in itself. As you can see, the length of this push, okay, and this exact movement is different from all of these ones. This one's a smaller movement right here. Then price established the big one right here. Then there was a break of structure. Okay, so when the break of structure happened, what particular fractal was broken? It is a fractal that starts from this exhaustion that started the new movement. That is from the low right here to the high. And what the prices do? Price rejected at the 61.8. Okay, so this 61.8 at this point was now what? The new key potential reversal area. So right 61.8, another PRA. So even though there was a break of structure right here, the last higher low was broken. Like you can see, the candlestick, there were body closes right here. So the last higher low was broken right here. But what did price do? Prices completed that opportunity at the 61.8 PRA. So what was our next job? Our next job is what? Taking the reversal areas from this resistance right here to this 61.8 to look for an opportunity within this window. This window is now our new PRA. Okay, so we'll take that window to the 1 hour time frame. And we won't take that window further to the 15 minutes time frame to first of all look for a break of this bearish structure that made us buy to this resistance. Okay, so let's go on to the 15 minutes time frame to see that first opportunity. Okay, and that was the opportunity that we traded and we closed last week. Okay, so what was the opportunity? It was what? Push, exhaustion. Then price started new fractals here. Push, exhaustion, establish this fractal, push, exhaustion, made the push and made the break of structure. This was the candlestick that broke the structure. You can see it's a very long candlestick from here, and it ended right here. So you could have done two things. One, you could have decided to what? Buy pinpoint right here at the break of structure, just like we talked about, or wait for what? Price to give a discount for takeoff, which prices did the two. Okay, so now what are we going to do? First of all, let's identify that this was the last lower high right here, and this was the candlestick that broke it. You can see all these candlesticks traded below the last lower high, and this was the candlestick that broke it. Okay, so if you had entered using what? Entry variation 1, you'd have bought there, hide your stop loss below the low, just like we talked about. Your stop loss must be below the low, and in the direction of trend 100.0, you could take profit anywhere around here for what? A 1:1.4 risk to reward. That is, if you are putting $1,000 on the line, you go with $1,400 on this trade position. Okay, what about after that? What is the next? We can bring out our Fibonacci from the low right here and see if prices would come for a 61.8 Fibonacci. Let's take it from the beginning of the push, which is right here, from the low right here to the high right here. We can see that prices came what? To 61.8 for the discount. Okay, so if you had waited for the 61-point retracement, it would have been a very beautiful buy right here. Then as usual, hide your stop loss at the low right here. Then take profit will still be at this resistance for a very beautiful 1:2.3. Okay, so this means that what if you risk $1,000 on this trade, you would have gone with over $2,000, and you can see that prices eventually came around that zone for take profit. Okay, anywhere around here, remember it's always a zone, so anywhere around here is your take profit level, and you'd have taken profit here at a very beautiful 1:2 risk to reward. Okay, so as soon as that is done, what is next? Market came around all these. Remember, we said all of these levels are zones. Okay, market came around this zone to complete that opportunity. And as soon as that opportunity was completed, what did market do? Market made some very bearish move right here. Okay, so what is the next thing for we to do? The next thing for we to do is not to look for a sell trade. The next thing for us to do is to identify another PRA by what? Bringing out our Fibonacci in this case from the low right here to the high right here, then identify PRAs. And we can see that all these levels right here are what? Are PRA due to what? A support right here and the 61.8. So let's go ahead and write that all these levels are 61.8 slash support PRA. Okay, and these levels can what? Can send prices back to this resistance. Anywhere around here would have taken profit. Okay, so what am I going to do next? I'm going to go on to the 15 minutes time frame to read that bearish structure and see how I can tap into a trade entry opportunity. Okay, so here we saw prices make all of these movements here, push, exhaustion right here. This is a different fractal. Then price started with new fractals here of push, exhaustion, push to this 61.8 level. So what am I going to be waiting for? I'm going to be waiting for what? For the last lower high to be broken within the confines of this small fractal. So as soon as the last lower high is broken, I could decide to enter using entry variation 1 or wait for entry variation 2, which is the pullback to 61.8. And what? And where will I be looking forward to take profit? I'll be looking forward to take profit at this point. Okay, even though I'm going from one fractal to the other. So your safest exit is here. This is your take profit 1 at this resistance within the confines of this fractal. But because of how we are connecting the information, we know that all of these prices only came back to what? To look for another PRA for a takeoff. So I know that price is going to go from here to as much as this level. But this is your take profit 1 at this level, and this is your take profit 2 at this level. Okay, so if you are entering pinpoints at the break of structure right here, you put your stop loss around here, then your take profit will be anywhere around here. It's not compulsory, it's pinpoint level. Anywhere around here, you can take profit for another very beautiful 1:2. And if you are waiting for prices to come back to give you the discount to 61.8, which is around here, just like we identified, what are we going to do? You could go from a beautiful 1:2 to as much as 1:6 risk to reward on this particular opportunity. Okay, so price action trading is so beautiful because of the art of what? Of coordinating all this information together, all the 5 elements I talked about, going from the big time frame to the small time frames and coordinating all these informations for very beautiful risk to reward and very beautiful trade entry opportunities. If you are looking to learn more, I have a link in the description below that will take you straight to my mentorship program, where I'm going to hold you by the hand and teach you the art and mastery of every single aspect of price action trading through a 2-month program. Okay, as soon as that is done, you are going to become flawless in your analysis. So see you in the mentorship and see you in the next videos, guys.